two major economies are once again, there are some trade tensions emerging between US and China. US President Joe Biden recently announced an increase in tariff on a series of Chinese goods such as electric vehicles, solar cells, semiconductors, among others, citing, and I quote, unfair trade practices, unquote, such as intellectual property threat and flooding global markets with artificially low priced products. What are the new tariffs? There will be now a new 100% tariff on Chinese EVs implemented this year, which will be a four-fold jump from the current rate of 25%. The tariff on solar cells will also double from 25% now to 50%. Additionally, tariffs on lithium batteries for electric vehicles will rise from 7.5% to 25% this year, and this will cover all lithium batteries by 2026. China, on the other hand, in response, has vowed to defend its interests in the face of huge new tariffs imposed by US and warned that the trade barrier would affect the relations between the two powerful economies. Kranthi, I'll come to you. I mean, what do you think will be the impact of this on India and on our markets? And do you see it as an opportunity for us, or will there be some negative implications too?
Suyash, if you observe the entire contest, the trade war again that started between US and China as US is nearing to the presidential elections in the coming December. So this kind of knee-jerk reactions are going to create pressure on the market. It's going to create volatility on the markets going ahead. We need to embrace these kind of statements going ahead. As there also the US presidential election is nearby. But in this entire bargaining of things that are happening, India have a fair bit of opportunity that India can be emerging as an alternative for the China, but we are just making the baby steps. We are at the preliminary stage. So how India is going to take these opportunities? Definitely, it's going to create some extra opportunities for the Indian economy as a manufacturing hub. We can see a lot of action we are going to see post-election results in terms of the chip making, EV are concerned. So definitely it's going to create opportunities for Indian economy because of these the extra friction that's taking place between the both US and China.
All right. And I mean, if you think about it, this new tariff, once they are implemented, I mean, they will also lead to higher inflation in the US as well, right? And this, I mean, they are already struggling with inflation. That has been one of the biggest pain points for the economy. Even Fed, I mean, before even looking at monetary easing, they really want to get back to that long-term, target of about 2%. Will it lead to inflation, and will that also further delay rate cuts by the Fed? Your thoughts, sir?
Definitely. So yeah, if the inflation, if the Federal Reserve is want to target the inflation in a very strong way, in a very calibrated way, then the rate cut action can be delayed. But still, the Fed action we need to see is Suyash, Fed also comes up with the liquidity management. They have the extra levers to manage the liquidity. So how these entire things are going to pan out, we need to wait and watch. Right now, Suyash, if you ask me the actions of Federal Reserve, it's better to not to discuss the Federal Reserve actions going to be because these are all very uneven. One week there will be a sudden change. Fed is interested in a rate hike. The other week we'll see the statements coming. No, Fed is going to reduce the rate cuts. So these are the very divergent views that is coming. So we need to wait and watch how this whole episode is going to be. But in between, on a longer term perspective, the Indian economic growth prospects are quite strong, and Reserve Bank governor made one interesting statement in the last monetary policy that he categorically mentioned that we are growth oriented in India.
Right.
If needed, we are ready for a rate cut. If the inflation comes to the comfort level in India, okay, they take the Federal Reserve as a bellwether for them. Indian monetary policy system can be independent and individual. We'll take what is appropriate for our Indian economy is concerned. It's a very interesting statement. Normally, we tend to say we need to wait for a Federal Reserve rate cut for RBI to give a rate cut to us. But it might be other way in the coming future. So we need to cross our fingers at this point of time.
Right, maybe. I mean, it looks like RBI could jump the gun and cut interest rates ahead of the Federal Reserve. I mean, considering the kind of variety of opinions that have come from the US Federal Reserve, from 3 rate cuts to 1, none, and perhaps a rate hike. I mean, they should perhaps time to rename themselves as Federal Reserve Open Mouth Committee, but that's a topic of discussion for another day.